LTIMindtree, let's discuss those numbers. And we have with us Mr. Debashis Chatterjee, the CEO and MD at LTIMindtree, joining in on the show. And joining him today is Venu Lambu, Designate CEO and Whole-Time Director at LTIMindtree, here with us. Gentlemen, both of you, thank you so much for your time. Debashis, if I could start the discussion with you. Your dollar revenue growth, that was down slightly, about 0.7% on a sequential basis. Tell me, what factors do you see weighing heavy on the dollar revenue? And more importantly, what's the visibility that you have for the next few quarters?
So first of all, thank you for having me on your show. Let me just give you some color for the full year. We had a slight decline this quarter because of various macro, but if you look at the full financial year FY25, we had a 4.8% growth year on year from previous year. We also had during the challenging times, we also did a customer satisfaction. Our customer satisfaction has been all-time high, which means that in spite of difficult situations, we have managed to stay very close to the customers. Order intake has been record order intake for this quarter. So if you look at Q4 order intake, it is $1.6 billion US. So with that, we have two consecutive quarters of 1.5 billion plus order intake. Otherwise, some of the operational metrics like attrition has been fairly stable at 14.4. The utilization was at 85.8. So overall, on the other metrics, we have done fairly well. And in terms of the future outlook, let me hand it over to Venu. Maybe he can cover a little more in terms of what's coming our way.
Thank you, DC. Firstly, thanks for inviting us. Good to be here. With regard to the demand outlook from FY26, I'll broadly, summarize it as follows, right? The first is the global macroeconomic uncertainties continues to be there. It hasn't changed from what we saw in Q4 as we get into the Q1. But the good news is that the clients are actually trying to figure out a way, how to leverage technology in navigating what appears to be the new normal. And most of the conversations are predominantly based on four broad themes, right? The first is, how do we get the savings better using tech as a catalyst? So especially, can we get the savings here and now? The second is about, this is a great opportunity for a lot of our clients to reimagine their vendor landscape. One is there is a change in the technology landscape, and there are also changes that's happening around their own supply chain and distribution value chain. So there is a great urgency in terms of reimagining the vendor landscape that's leading to the vendor consolidation opportunities. The third is, if you want to get ready for the AI economy, there is also need to optimize or modernize the tech, both simplify as well as modernize. So that's a third broad conversation. And the fourth one is, there is that great wave of leveraging GCC capabilities out of India. So these are the four broad conversations, and we are very focused on these four broad themes, cutting across all of our multiple service lines to our focus customers.
Venu, your EBIT margins for the quarter gone by were steady at about 13.8%. With costs in check now, is there scope to better the margins? And if you could also give us the dollar revenue guidance also going forward.
Yeah, look, I think, I had mentioned about that we're looking at relooking at our entire cost, whether it's a direct cost or indirect cost through a different lens. We put that under a program called a Fit for Future program to actually relook at this entire cost category. And that has started yielding results. We see a great progress in that program. And so we can expect our margins to get better as we get into the Q1 and throughout the year. So I'm fairly optimistic about that.
Right. Debashis, but what about the headwinds that you foresee for the time to come? We are looking in a post-tariff regime. I don't know which way the negotiations with America are going to go as opposed to the rest of the world. But what sort of headwinds are you anticipating?
Look, I think as far as headwinds are concerned, even if you look at our commentary in the last quarter, we had called out a few aspects. We called out a specific issue with the client where we had to look at productivity gains. We knew about that headwind. We were quite bullish about our order book. As I said, we had two consecutive quarters of $1.5 billion plus order books. But unfortunately, some of the ramp ups that we expected to happen in Q4 did not happen the way we anticipated. So that was one of the headwinds, and mostly due to the macroeconomic situation. Now, having said that, whatever we do in the future is a reflection of the portfolio of clients that we have. We are working very closely with our clients. Our clients are also figuring out in terms of what kind of headwinds they will be having in their businesses. And I think Venu has already worked out a process by which we are closely looking at this, as we go along. But it's something that we are keeping an eye on, but I don't think we are overly worried about headwinds per se. We are more concerned about, we're more focused in terms of what can we do in the current situation where we can still help our clients to navigate through the journey, and which will also help us in the long run. You want to add anything, Venu?
No, I think you covered that, DC.
So, Venu, I know things are pretty hazy here, but tell me, what is the visibility that you have so far on North America and Europe? Because those are the segments which actually slipped, whereas rest of the world delivered better growth. Or do you think in times to come, your focus would be more on ROW and how it can play catch up to Europe and North America?
Well, I wouldn't conclude that way. I think the short-term uncertainty or short-term, fuzziness that, as you mentioned, I think the businesses will figure out a way, to navigate in the dynamic situation and thrive in that. And if you look at our clientele base, they're part of the Fortune 500 and Fortune 1000 customers, and these are the businesses which has gone through a similar evolution at different points of inflection. So I'm really excited about what comes out of all this, right? And we also have another interesting thing that's facing us, which is the AI. And, so businesses are looking at both this as an opportunity to remodel their businesses, and also look at how AI can play a significant role in unlocking the productivity at the enterprise level. I tend to be very optimistic about the future, to be honest, right? So yes, we are dealing with a short-term, uncertainties, challenges, whether it's regard to the tariff or the overall macroeconomic situation, but I'm fairly optimistic that businesses will figure out a way, to sort of thrive in this.
So just want to get a little bit more specific here, because when it comes to your various segments, it is the consumer business and healthcare which saw a decline. Is it a temporary blip, or is there a structural challenge here, you think?
Look, to be honest, on consumer services, we see an increased traction in the pipeline as we get into the FY26. Yes, there were one or two, projects that got deferred in terms of ramp up for the Q4. But if I just look at it from an outlook perspective, we have some great opportunities in the consumer segment. We might announce some large, strategic partnership and strategic engagements very soon in that segment. We are at a very advanced stage of that conversation. The second is with regard to the healthcare. We classify healthcare and public services under one group. So, and that decline is related to projects in the public services, which sort of happened during that quarter.
You just talked about AI previously, and you've had several new wins which are AI dominated, from quality engineering for a US insurer to AI ops for a reinsurance group. Now, would you think that AI would be the sort of common thread across the deal wins?
Oh, yes, it is. It's going to be a common thread for all of the IT services capability. And it is also going to be a new opportunity if you actually look at from an agentic world perspective. And that's why we have, created a focused organization to play big on the agentic AI world.
DC, there's strong traction in verticals like energy, utilities, life sciences. Are these sectors also sort of emerging as key growth drivers for FY26?
Well, I think, the verticals in which we operate, everything is a growth driver. But if you look at FY25, bulk of the growth, 80% of the revenues came from three verticals: BFSI, tech, media, communications, and manufacturing and resources. Those verticals will still continue to drive growth, and also healthcare, life sciences public services also is a vertical in which we are focusing on. That will also drive growth.
Venu, deals like data center migration, hybrid cloud security, they're also showing a very tech intensive focus, that is. How is it that you plan to scale up these segments so they can be big and large, revenue generators for you?
Look, firstly on the cybersecurity, definitely yes, it is. I always call that as a practice that is for all seasons. Whether you're adopting digital cloud or AI, cybersecurity plays a significant role. So that's one area that we will sort of down a lot as we go along. The second is with regard to the data centers. Look, because of AI, there's going to be a huge demand for the computing capacity. And we have a focused, data center and infrastructure practice within us. We have some strategic partnership with both hyperscalers, as well as, the hyper AI players. And we will leverage those partnerships to actually, double down our focus on helping our customers to build the right computing capacity, whether it is, within the data centers or it's within the cloud. But the world is going to consume significant computing capacity over the next few years.
Both of you, thank you so much for your time today, and thanks for speaking with us.
Thank you.
Thank you so much. Thank you.
If you like this video, then like, share and subscribe to ET Now.